Hey guys, all in crypto here, and welcome back, ladies and gentlemen, on this wonderful Wednesday for another YouTube video. Today, we're going to be diving into our daily cryptocurrency market update, and you bet that we have got a lot to talk about in this one. Yesterday was a brutal day, seeing Bitcoin go from around about 22,800 all the way down to 20k. In fact, did we dip a toe under it? We did indeed. Now, this brings our head and shoulders that we were looking at, that's going to take Bitcoin to round about 14, just under 15k, into play again. Yesterday, we were indeed looking at the fact that a lower CPI print may indeed provide relief or further relief for markets. And we're going to be talking about what actually took place yesterday. You guys know that we've had this head and shoulders pattern in play. It hasn't yet formed, but is looking more and more apparent with this very skittish, harsh sell-off that we've recently just had, that this pattern is going to be in play and actually probable, taking us to the downside. We had a number of things. You know, we were looking at this. This is something that we drew ages ago, right when Bitcoin was around about 18k. This was drawn by us on the 7th of September. And we were essentially saying right down here, you're going to get a short squeeze. It's going to take us back up. We didn't quite expect it to be as strong as this. And then you were going to get the final slam down. So I had lots of comments on yesterday's video saying that I was wrong, that, you know, there wasn't this huge... The title of the video was Huge Pump Coming, question mark, question mark. And we were talking about the fact that the CPI data was coming out. A lower print, certainly anything below 8, would give relief to markets. But the print that we actually had yesterday was 8.3. The prior one was 8.5. So there hasn't been this kind of collapse that I think everybody was hoping for in inflation. And the fact that we got a marginally, and the headline CPI actually I think was up by 0.1. The fact that we got a marginally lower print is going to really fuel the Fed and give them the kind of go-ahead to be extremely harsh in terms of dealing with inflation. They're going to do that through interest rate hikes. It's now looking like, and we've got a lot to show you in this video, guys, so really do stay tuned. Let me find the Fed Fund futures rate. This is the Fed Fund futures rate, and this is essentially what took place yesterday. Let's actually move this down to an hourly. You can see that this is the Fed Fund futures rate. So when the Fed Fund futures rate goes down, that means interest rates are priced going up. And you can see just the drop here on the CPI print. It's no surprise that the cryptocurrency market and Bitcoin, remember, now as a crypto trader and investor, you need to be paying attention to all markets. This is Bitcoin's price, and this is what happened on the CPI. You had your Fed Fund futures rate, so interest rates being priced in more aggressively on the futures market, the 30-day futures market. You also had a rip in the dollar, ladies and gentlemen. So remember, we said this is a dollar story. Why is the dollar getting a bid? So to recap on yesterday's video, and I had some real trolly comments on there from people who have never traded a market in their life, because nobody is going to get every single day's call right. What matters to me is getting the overall direction and the overall trend right. And we've been spot on about that since 44K. And even though we said there's the possibility of a serious pump yesterday, we also said crypto market's very likely to dump into today. So what we were looking at yesterday was rally off the CPI print and a huge dump as we've got the merge tomorrow. Now, the dump happened. The merge is going to play a part here. You're going to have people trying to get out of the Ethereum trade that they've been in for a while. They've done very, very well. But essentially, you know, the CPI print firmed up the dollar because, again, it basically means that the Fed are going to continue to be aggressive. We can see that in the Fed funds futures rate. We could definitely, I reckon, see that in the euro dollars. Let's pull up the euro dollar, something that we spoke about. Yeah, look at your euro dollars. Not as harsh as the. Let's get rid of this. Look at the gap here. Maybe put it to a daily. Look at this gap. This was off the CPI print, ladies and gentlemen. And Bitcoin just follows along. Remember, these are all things that we've been looking at. I mean, you can see just how in sync these are, by the way. But essentially, because of this print, it basically means that the Fed are going to have to be a lot more aggressive. or they're going to continue to be as aggressive as they've set out. They've got no reason to back off. Markets are bracing for this. And this is why we are not investors in this market. When I talk about getting the overall trend right, that's what we're talking about. I am a trader, but in terms of sums of money, far more capital is allocated to being an investor. What we trade with is what we trade with. We have a private trading account where we try and day trade, so on and so forth. If you want to find out my trades, you can always join my Patreon. And I think we lost about 250 quid being long going into the CPI. We had very, very tight stops. You saw a mass of liquidations take place yesterday. What are you doing to get liquidated? Well, you're not positioning correctly, you're using way too much leverage, and you don't have any stops to save you if it goes against you. You are never, ever, conviction kills traders. It also makes them. It's a very, very fine line to walk being a trader. But if you're getting liquidated, go and look yourself in the mirror, because there's no reason for you to have got liquidated. We were actually positioned long into the CPI print because we thought there was a good chance CPI was going to come out lower and markets were going to take that further relief on the back end of already seeing strength. We did say that they weren't going to run past your sort of 25k level. And in actual fact, the opposite was true, but we have stops to deal with that. We then took the shorts on chilies and a number of other altcoins, made all the money back that we lost. I think it was 250 quid that we lost, like I say, up massively still from Monday. And I had a lot of troll comments, and I just can tell that these are people that have never traded, don't understand this game, and are too emotional and angry at the world. And it's sad to see. You're not doing yourself any favors, and you're not doing anybody else any favors. So grow up. But essentially, now we're looking at this head and shoulders playing out. This is something that we spoke about on a number of occasions, is the fact that you are now forming this. And this is going to give you a target. And we'll actually draw this for you. We've drawn it a few times. It's something we've been looking at for a number of weeks now. Not seen many other people even calling for this. There was some cause for concerns with this forming, and the reason being is just how aggressive this was. But you can see you've now had a matching, equal or greater sell-off in terms of momentum to the downside. This rolls down here. Maybe you have some sort of a double peak, because you've got this double peak over here. Some head and shoulders analysis, if this is your left shoulder, like to say that you've got to mirror it. You break this, well, you're going to look at a target of actually around about 12k. It's possible, guys. I think 15k is inevitable at this point, but I think 12k could be quite likely. What are we looking at on the smaller time frames from a day trading perspective? So that's our overall macro thesis. You guys know, and we've been saying this, we are cash heavy. We're cash heavy for this exact reason. Looking here, you could probably see Bitcoin return somewhere like here and then continue to come down. You've got to remember, going into next week, we have the FOMC, which is where the Fed is going to implement another interest rate hike. We've seen markets really since the last FOMC actually rally. And the reason really for this is because they're kind of like, okay, well, that little bit of pain is over. We can now take a break. But now the pain is back on with the Fed looking to up interest rates. Remember what this is all about, talking about our macro thesis, right? This is all about money supply. Money supply has not only been taken off the table, but it's going to continue to do so. Yesterday confirmed, really, more than anything, at what rate. It's about money supply getting taken off the table. Look at the correlation here. It's not just crypto. We're also very correlated with the stock market. Why are we correlated with the stock market? Well, we have the same players involved. And we're also a market that is driven by money. One thing that's been a huge learning curve for me is understanding that there is a huge disconnect between an asset and the price of that asset. And what I mean by an asset is the fundamentals behind it. In the space of in regards to the cryptocurrency market, we've never been so evolved. We've never been in such a good position in terms of the technology, the adoption, so on and so forth. But the price doesn't correlate that because the price is moved by speculators, by money. It's a future price. There's a basket of factors that go into determining. This was the Nasdaq's close yesterday. And we've been saying for a long, long time, your Nasdaq and your S&P are in a period similar to 2008, 2000 that the cryptocurrency market's never had to deal with. For me, that means there's more pain. If this head and shoulders plays out, realistically, and I'm going to do this again because I did have it at 15k last, realistically, you are going to be looking. Yeah, I didn't think that was right. I don't know where we got that from. you are going to be looking at a 15K Bitcoin, in my opinion. So somewhere around here, you're going to fall to. Have we got any sort of, you can see actually that you've got some big support down here, 11K. You do have some support areas here. Look for areas where you stalled and you saw price actually being filled in here. This is why we've rested. One reason we've rested on here. Also, you've got your generational bottom. Once you go through this convincingly, imagine the stops that are underneath here. And you've also invalidated this very, very significant psychological level, meaning that you're going to go to the next one, which I would say is around about 15K. That's what we're looking at. Nobody got wrecked yesterday. Not if you were following me, you didn't get wrecked yesterday. If you traded this market and went aggressively long without any stops, that's your own damn fault. We were long one altcoin Rune. We even shared the trade on my Twitter for anybody that's interested. We're still something like 500 quid up on Tuesday. It's Wednesday. We've got a lot of trading to do this week. And that was with yesterday's loss. So it really winds me up when I see people in the comment section. You just need to grow up. You know what I mean? I don't know what you're doing lurking in the YouTube comment section, trying to troll people. It's annoying. We've been spot on about the macro thesis really since 44K and the direction of this market. And I believe we're going to continue to do so until there's reason for us to flip. Everything that I've spoken to you guys about in this morning's update, don't see many other people talking about. We are crypto traders, but we are paying a lot, or if not even more attention to the kind of macro as a result of the fact that it's driving everything. And remember, this is a dollar story. What did the dollar do yesterday? These are all things we've been telling people to watch out for. Dollar may see a bit of a rest still. Now, does that mean crypto can get a bit of a bit? There is, I wouldn't short this here, to be honest. Let's get rid of all these draws. I'd probably take the long. On a day trading perspective, doesn't mean I'm buying crypto and investing in it. It just means that I'd probably take a long to somewhere like here, maybe where you sort of fell into this. And then you get that further downside. But remember, neckline for your head and shoulders around about 18K, 1850. You break that, maybe you come up and retest it, then you're putting in this wider head and shoulders pattern that we've been calling and looking at for a while now. Very hard to call markets every single day correctly. Even though we said, look, there's a possibility for a huge pump yesterday, we said it was really dependent on the CPI. This CPI didn't really give much validation to either direction, but really gave, because it was kind of this no man's land, it kind of supported the overall trend, which is a downtrend. People would have basically aped out of positions, so on and so forth. So it's a particularly brutal day. Doesn't mean we can't have some sort of return move today. I don't think we're coming back up to 22K, but some sort of strength take place before we then see that further capitulation to the downside. Like I say, always been our belief for a long time now that we think Bitcoin's coming lower. I believe it will. How we get there is going to be interesting. It's supposed to be the merge today. We'll have to find out what goes on there. Does that mean that there's an even bigger dump coming tomorrow? Potentially. This is all risk that people don't price in. And what happens if something goes wrong with a merge, so on and so forth. We also had the Chinese inflation. We've got the UK inflation coming out Thursday, I believe. It says that China's inflation is actually far lower than the US's, but they're still feeling the pinch with a lower inflation. This is why inflation is such an important task that needs to be tackled, because it is extremely damaging. And again, tying into our macro thesis that this is going to be a harsh winter and we're going to see these lower prices is, people are going to be broke. Do not be in the asset that people are willing to sell to get cash when people need money. It's quite simple. A little bit of interesting news here. The South Korean court issues arrest warrant against TERRA's co-founder, Daquan. So he's in some seriously hot water. It's going to be interesting to see how this all plays out. TERRA wrecked a lot of people, and I think there's lots of people to blame for it. But we will keep you up to date on this story. May even do a separate video on the whole thing. So what are we looking at now? Well, potentially you could have a bit of a rest, bit of a pause to the upside. This is a downtrend. This is a bear market. When you're longing, and we've always said this, if you're longing in a bear market, make sure you have tight risk, because certainly in this kind of a bear market, in a recessionary bear market, things can turn very quickly. And if you're not correctly sized, you've not managed your risk, and already visualized what your losses are going to be if you're wrong, you're going to get hurt, and you're going to end up being one of these $380 million worth of liquidations, which we try and prevent on this channel. So that's all I've got for you. It's going to be a very interesting week. Some things to look out for are potentially the CPI print. Head and Shoulders is looking like it's in play. This is something we've had a target for. We did say that this was actually quite likely, something like this, and this was again back on the 7th of September. And that, I believe, is really all I've got for you, ladies and gentlemen. If you've enjoyed this content, a like is always appreciated. So is a comment. Make sure you hit that subscribe button. I know a lot of you aren't actually subscribers, but you watch daily. So if you can do me a favor and hit subscribe, it really helps the channel out, helps me out. Also, a like and a comment is greatly appreciated. I'm going to love and leave you to your Wednesday, guys. If you've enjoyed the video again, hit that like button. See you in the next one.